Hello and welcome to another update video about gold. Yeah, gold has performed quite well the last few days. Silver a little bit more painful, but gold has sort of, reacted to the support region. Talked about that only a couple of days ago, and we're now in the resistance area. So we just moved from support into resistance. Structure to the upside, talked about in the last video, looks a little bit like a 5-wave move up. Problematic is now that this 5th wave is extending. So that again gives it this kind of ABC look. Yeah, so ABC, which means it's not clearly bullish. Yeah, you know, it looks bullish because it's an uptrend, but it just means it could also easily be a 3-wave move again, right? Especially because the A wave in yellow, like here in yellow, and the C wave, they tend to have the same or similar length. And if I compare that, then we're looking for the 100% FIB extension. Well, 2,724 is that level, and we're nearly there. So that means wave C and A has the same length in yellow there. It could still be a 5-wave move. You can label it like that, but whenever that happens, it could also easily be an ABC structure. It just increases the risk of failure, or at least it means we have to be on the side of caution. All I want to say is that within the larger resistance area, and I'll try to let me delete the lowest one, we don't need that anymore. Within the resistance area, which is just the standard resistance for Circle B, after the A wave likely bottomed in November here, around the 14th. Within that standard resistance area, we have a smaller resistance area that we can watch as a target projection from the internal structure. Which means as we're then, well, now we are finishing up the week, but if we then when we start the new week, we can watch these levels: 2,724, 2,750, 2,765, and if we extend even further, 2,791. These can be observed together with the standard Fibonacci retracements, which are standard resistance levels for the yellow B wave. So the yellow count is bearish. At least it would send us lower in a larger wave 4 in a C wave. So what is the level that allows us to distinguish between the yellow count and the white count? Because we expect the pullback anyway, probably from there. I mean, in the white count, had this been a 5-wave move, it should have already happened. But again, in the white count also, this move up can be just an A wave because we're dealing with an overall larger diagonal pattern. The main takeaway has to be that there are some Fibonacci levels that we can watch once the pullback starts. And they are defined between 2,578 and 2,647. So as long as we're holding above 2,578, I would be leaning towards the white count, even though this is a 3-wave move, but even an A wave can be a 3-wave move. So should we get a break, let's say below the last swing low at 2,687, it might indicate the beginning of the B wave. I don't think that B wave has started yet, but it might start from that blue target region now that we have a, let's say, more detailed microstructure. And then the B wave itself is expected to be a 3-wave move, ABC, but if it starts to be impulsive, or if we break below 2,578, it's more clearly yellow. So that means we have some levels to watch. From up here, I would expect a rejection. The structure of the next pullback will tell us if it's the white count or the yellow. I'd be slightly leaning towards white, but it's fairly neutral because this pullback was very deep. The rally seems to be a 3-wave move rather than 5. But even in the bullish count, a 3-wave move is possible. That's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.